Yeah, I want to call attention to this Kid Dynamite's Hulkamania Formation that he had the article on, which I thought was pretty humorous, but it is true. Well, it's quite funny to call it the Hulkamania Formation. I don't know if one of his subscribers sent this in, but I also want to point out he's got some good information, and I wish I was reading some of his stuff before because it would alert to me to some other things. Um, here's the arm, and here's the where it goes into the shoulder. The raised fist. There's the head, and there's Hulk Hogan pointing upward, and the market will get body slammed. Now, the big question is, when is the market going to get body slammed? And I'm not just saying this because I'm saying whatever goes up must come down, or I've got a negative attitude or something like that. No, I'm going to do this right off of plain common sense. Not that I'm going to have an exact date for anything, but I just want to point this out again because, one of the reasons I got on here is because I was listening to a lot of silver channels, and I'm like, I'm picking up a lot of stuff I don't really like hearing, and some people mean well, and I think the people that are really out there with a lot of people on the channel, I don't know. I mean, some of the guys that have been around in the business for 20, 30 years, they ought to know better. They ought to know better, and so that was really kind of aggravating me. Some of the people who just got tuned into precious metals or different things going on in the market in the last few years, they're just stating their honest opinion. So I'm fine with that, But I want to point out something again about oil. First, and just because let me put it this way, I didn't hold oil long enough because I got sick of holding it, and I should have held it for this upturn here, and I didn't, right? But I did a couple other things right, so it wasn't that bad, but I would have been better off holding oil for this period of time, which I didn't expect it to jump up like that. So, but I think that possibly I might buy some at 103 if it pulls back. Now, I don't know when. I don't know exactly when. I might. It just depends on what I think is going to go on with Iran. You notice how bad this market is so news-driven? It's almost like, there's another... It's like when everybody's running scared, or something panics the market. It's all psychological. 90% of it's psychological. Makes no sense. There's fundamentals are one thing, but a lot of it's psychology. But I do think oil price is going to go up a lot, but I just also said I think the silver has the potential to go up a hell of a lot more than the oil, because oil really can't double without killing the economy, but silver could double, and it's not going to kill the economy. Silver can go more than double, easily. But again, I want to point out, if it gets up like this or higher than 150 a barrel, and it stays up there, it's going to kill the economy, in my opinion. So we didn't get up there yet. So actually, the IMF declared that speculators are causing the oil market to rise, and all of a sudden the oil market just falls. I mean, it makes you wonder. It's almost like we've got a centralized planning going on here or something, The IMF says that speculators are causing all the rise, so why would that make speculators decide to sell? Makes you wonder, right? A little common sense makes you wonder. Pretty much almost like the game is rigged, but I look at it like this. If the game's rigged, I want to know how it's rigged. I want to know what's going on. And the game isn't exactly rigged. What's going on is the fact that the powers that be, when they had the 2008 financial crisis, that scared the crap out of some people on the top. There was a lot of things going on. There was problems in the money markets in September. I mean, they had to do this big cash infusion into the money markets. I forgot what it was. It's some stuff I kind of know that not too many people know, but I'm not going to elaborate on it because I forgot what the hell it was. But they had some serious problems where everything was basically going to collapse for real in 2008. It wasn't just a scare. So, I mean, some of these guys are talking about collapse. Now, the two guys you really listen to is Mark Farber and Jim Rogers. Why? because they made their own money. You know, they're not out there. You know, you don't. I mean, yeah, they make newsletters and they go and talk, but their main thing is they made their own money. You know, so that's why I respect them. They do say that there's going to be, you know, like this is the oil prices, but it's going to be a collapse. There is going to be a bigger collapse in the future, worse than 2008. He doesn't know when. Mark Farber says he don't know when. Jim Rogers says he doesn't know when. They both think things are going to be pretty decent for the elections, for the most part. That's what I think. Not because I'm saying, you know, I'm on an equal level. What I'm trying to say is that it makes sense to me. It makes sense to me. They usually do that type of stuff. And it may not be good the whole time before the elections because there's other things that can happen. War with Iran. Maybe the war in Iran happens and it doesn't go the way the West wants to go. It's an unpredictable event, so there's a lot of things that can happen. But, you know, getting back to this Hulkamania formation, I think that's what we're going into. We're going to be going up, and we're going to get body slammed. This is right now, the Dow closed above 13,000 for the first time since May 19th, 2008. I'll post a link on this as a Yahoo story or something. I don't know what it is. Almost 4 months before the fall of the Lehman Brothers investment bank triggered the worst of the financial crisis. Remember, the guys that really listen to Mark Farber and Jim Rogers predict there's going to be something even bigger in the future because they haven't really resolved this stuff. They're just printing money, quote unquote. But I don't like when all these conspiracy, I don't know what to call them, conspiracy. There is a racket going on. There is an elite. It's true. I mean, it's nothing new though. It's nothing new. It's nothing special about that it only exists in this time. It's been like this. You know, read Roman history. God, you want to hear about conspiracies and plots and stuff. Well, you'll see a hell of a lot of them in that history. Far more than you ever see today. So, I mean, I think they were the ones that would do all kinds of stuff that went on back then. And I was a big advocate of Roman history, and it tells me a lot about human nature. That's why I don't like using the word cloak and dagger conspiracy per se. It is basically how powerful people think. They don't agree with each other, they compete with each other, and they just got a bottomless appetite for money and power. You know, egos, they just can't fill. It's like a bottomless pit. It's a hole, you know. You're throwing stuff in there, it don't matter how much money they get, they want more. So, and I got kind of like, you know, I've been around people like that, okay? And I think they're okay, but that's just how they are, you know. So anyway, you know, Dow clears 13,005. So that's a big, again, psychological thing. 13,000. Oh, the recovery's on. Now, the one thing to watch for is oil prices. Now, the other thing to watch for, I said, was this. And this is not like a perfect, you know, you're going to be able to day trade off of this damn thing because I don't know what the hell. I got lucky today. All right. That's plain and simple. Okay. But as far as what's going on in like with this global manufacturing index, you can see this was May 31st, 2008. Where was it sitting? It was sitting right about 50. That's actually crappy. It's got to be over 50. It's got to be like 51 or something like that. It's over. It was right around just a hair over 50. That's actually like negative growth. So you can see what was going on all year in 2008. It was dropping. This is 6 months. 6 months. Okay, so you got January, February, you know, the next one's March, April, May. So you got 5 months there, then it went down again 6 months. And when did oil start crashing? Right after July 4th weekend, you know. Nothing to do with supply and demand. I'm sure there's a lot of people driving around for July 4th weekend. Nothing to do with supply and demand. And, you know, that Ken Fromm had some good information for Lindsey Williams at that time. But he wasn't the only guy that had that information. I could tell you that. I saw this stuff, and I was like, wow, that sounds pretty wild. You know, I just didn't believe it at the time. I believed it the second time, of course, you know. But I kind of did make out on investments because actually I started getting into things when this all dropped off. So I wasn't that stupid. But this was a big indication that things were gonna cool down. And you saw the silver. What happened with silver? Silver like dropped off, but it wasn't. It wasn't until oil killed it. Oil's gonna kill it, and that's why I'm thinking. You look at this oil and look at this manufacturing index. That's gonna give you a good idea, or not a perfect idea, but a rough idea when silver's gonna tank. So right now, what happened here? And I mean, this is not a perfect tool, but let me put it this way. These are the general common sense tools of one thing, like QE is another thing. Look at the QE chart. What happened to the price of silver? What happened to the price of cotton? What happened to the price of cocoa? What happened to the price of corn? You know? What happened to the price of palladium and platinum? Right? It's like it wasn't even off of fundamentals. Now, I'm trying to say this not as like a proponent against physical metals, because I myself have mainly physical metals. And I got mostly industrial metals. But see, this is where people are being steered wrong too much. I mean, if there's an actual catastrophic crash in the economy, you do want physical silver. I don't think it's there yet. I don't think it's there yet. And there might be a big crash this year, but it's still not going to be the end. They're just going to fix it again. But that to me is like, I'd love to know when that crashes, because I'd like to be buying stuff back cheap. So that's my game. But obviously the game is, it's a card game. Most people are going to lose and a few people are going to win. So, but you know, when I see what's going on is a lot of these people that are some of the bigger silver bugs, some of the bigger guys. I'm not talking about the little guys that are going on YouTube, their smaller channels and stuff. I'm talking about some of the ones that are well known. I just can't see they could be that stupid as to be telling the little guys all this stuff, because I think the little guys are going to get screwed. That's how the big guys make money. They screw over a whole pile of little guys. So pay attention to this global manufacturing index. It's not a perfect tool. But you look here, this is at the end of November 30th, okay? It was flattened out, you know? It was flattened out, right? So, what happened? It started rising, right? It went up on December 31st. That would almost give you a hint that the global manufacturing index is going up a little bit, yet silver was at that bottom right then. It'd almost give you an hint that that probably was the bottom, right? Probably. It's the first time it was going up since back in early 2011, right? Didn't start going up till the end of 2011. That tells you something. And if you look here, back in September, 30th, 2010, that's when it hit the bottom. It started going up, along with QE. Look at QE also. And what happened? 229.11 started going down. So basically, that gives you an indication that what was going on in the silver market at that time was probably, well, it proved out to be a bubble, right? It crashed, right? But the primary manufacturing index was going down. Now, I know some people into purely physical silver theology, whatever the hell you want to call it. It's almost like you're saying it wrong. In other words, yes, I agree that physical silver should be a lot more. The price is being suppressed. I do agree. But looking at these other things can tell you when this thing's going to turn down. If this primary manufacturing index was going down, I don't care about the stupid manufacturing stats and what the hell is fundamentals and all this garbage, and you know how many solar panels are going on. There's probably less. The economy's cooling down at this time, and QE was ending. So a lot of money started jumping out of the commodities. It wasn't even just the margin rate increases. It was other things. It's a combination of things. So I think watch this and watch the oil. So hopefully, not just the billionaires will where the price is going to turn. Some of the little guys are going to pick where the price is going to turn. And as far as what's going to happen with silver, obviously I think it's just going to keep going up. Now, as far as what I did with this USLV, I didn't sell half of it, but I sold probably about, I don't know, a good chunk of it, more than a third probably. And I sold some PSLV today. Now I could be wrong. The stupid thing could be flying up tomorrow for all I know. But it had an extraordinarily good day, and I think it might be up a little more even over the week. But I'll sell some more off. But when there's a pullback, I don't know if I'm going to go into silver, or I'm going to go into oil, or I'm going to go into something else. I'm not sure. I'm not sure. But obviously, you're not going to get 4.5% a day in silver for too long. You might, but if you know what, if, and I'm going to repeat this because Mark Faber said this. Pay attention to that guy, but I'll repeat what he said. If the gold and silver markets get so heated up that they're going to move ahead really, really fast, there might be a crash in a flat period all summer. So I mean, but what I think might happen is, take a look at this, the global manufacturing index. Take a look at the oil over here. So if there's an attack on Iran and it doesn't go well, and they destroy a whole pile of Saudi oil fields, and I don't know, whatever happens, maybe there won't be an attack. I think there is going to be one, though. But so when it happens, and if it doesn't go like, say for instance, it goes like clockwork, and they just only hit the nuclear power plants or whatever, the enrichment facilities, and there's as little damage as possible, and it just goes real smooth, and hardly anything's affected economically, then obviously I think things can go along for a lot smoother for a much longer period of time. If that happens, where the war goes on, where there's Iran strikes Saudi oil fields, the price of oil is going to stay up a long high for a long period of time, because Saudi's the one that's really making up the difference. And actually, this is going to actually create a problem between the United States and Russia long term, not because there's ideological differences or anything like that, but what it's going to do is going to put a hell of a lot of money into the pockets of Russia, because Russia actually is about as big an oil exporter as Saudi. So they're going to get a lot of cash, build up their military, and the game is basically this. There's always a scramble for the top. The top countries all cooperate with each other when it's in their interest to do so, but when one has an opportunity to knock the other guy down, they'll do it. So, there's a number of outcomes that can come about, and nobody really knows this. The military don't know it, because the military constantly plans for various outcomes. That's why they're doing that type of stuff. Nobody knows exactly. But these things are the things to watch for. And the silver bugs are going to be telling you, say for instance this manufacturing index was down, and oil was way the hell up, and this manufacturing index is going down. They're going to keep telling you, well, the graph of silver looks like it's going up like this, and it's going to hit this next point possibly, or maybe have a pullback, and it's overbought here or not overbought here, or what, you know what I mean? Don't even look at that crap. Look at the overall landscape. And the overall landscape is, how is the economy heating up? Is it slowing down? Is oil killing the economy right now? That type of stuff. And that'll tell you if there's going to be a pullback. And, this could have all been predicted back this year too, even without knowing that insiders in Sprott were selling. Even without having that specific information. But, obviously, Eric Sprott selling on Thursday, April 28th, 2011. And here I'm thinking about silver, on Thursday and Friday. I'm like, I wonder if I should sell some. And Monday, the thing is down like 11 bucks. Well, that's pretty good. That's pretty good. So, actually, if I knew that kind of information, I'd be shorting the hell out of the market. I would be. That'd be nice, right? Make money on the way up and down, but I wouldn't know. I would never try to guess where to short before it happens. I mean, after it obviously, this is not a silver chart. Obviously, this is a global manufacturing chart. So, but it basically tells you what the hell went on with the economy overall. It was sinking, and here in late 2008 crash, and then start pumping up with QE, and it went down, just like the metals. It follows almost like the metals, QE and everything, all runs together with this. So, but looking at basic fundamental things, how economies work, this is more important to look at. So yeah, and I would not try to short silver and guess when it's going to crash. I mean, unless you got a microphone in J.P. Morgan. Now, if anybody knows how to get J.P. Morgan, I'm up for that. It wouldn't be the first time. Not with them, but other people. Anyway. But if you could find out that kind of information, they know it. You've got to be an idiot not to believe they don't know people don't know what the CME is going to do with margin rate hikes beforehand. You'd have to be an idiot not to believe that there's other people that don't know that information, and they act upon it, and they make loads of money on the way down. Because it takes you a million years to get the hell up here, right? And like silver's going to take longer to go up than this, and it's going to go down faster than this. It's going to go to like a vertical line when they raise the margins again. So why wait for all this time? You can just, if you knew this the day before, the guys on the inside, obviously, I mean, they make a killing inside of like 24 hours. It took you, months in an extremely hard bull market. It's great. I'd love to know how to do that, but I don't know how. So what I would try to do is I would try to catch a piece of it, and I think this is where the Fibonacci comes into play. In other words, the thing's crashing. It's still, maybe it's down this much, but you don't think it's, let's say this is like a daily chart or something. It's not a weekly chart. Say it's a daily chart, and say this was silver. It's crashing down. It crashed down this much in a day. You might be able to pick up this piece right down here in the bottom. You might be able to pick up this piece. That's all I would try to do, because this is where your Fibonacci can come in a real good play. Because if it broke through a certain level, say this was a level here, I don't know, and it's going to go down to this next level or whatever, and usually sometimes it pierces below the next, it can go slightly below that next level for a slight amount. So that could be your sell point. That could be your sell point. If you calculate how it works on a ZL, what the hell, I don't know what that is, not AGQ, but the GQ, whatever it is. I forgot what it is. The one that shorts it. Well, it's double leverage, and you have DSLV down, I think. Triple leverage. So I would try to catch a piece of it. I would not try to short the market ahead of time. Like I said, unless you got a bug in JP, I don't know if they know even. I'm just picking on JP Morgan. I'm sure, there's plenty of JP Morgan people, employees that are kept out of the inner circle, and I kind of know how some of those things work. And well, I do know some things of how they work, because I got that anyway. But anyway, just watch these type of things, and we're going to get into this Hulkamania Formation, and this is going to be silver too. It's going to be flying up, and it's going to get body slammed. So watch for the body slam. And what I'm going to try to do is get out of it in pieces. But I'm not selling any more PSLV until I think it gets around 60. Because I think it's going to go up that high. I'm not going to even sell at 40. I sold that little piece today because I just decided to buy another piece when it dumped. The premium went down. But basically, I could have bought SLV, and probably SLV would have performed slightly better. Or I should have bought USLV, actually. But I just saw that when the premium dumped down that far, that the premium could recover. But, that was the only portion I sold. I'm keeping that as kind of a backup, because I think silver is definitely going to blast through 50. And that premium on a Sprott is going to come back. But I'm going to do some other things too. But I just made this to basically give people a warning as to what to watch for, especially some of the bigger pundits on silver. You know, you get them on these big shows and all this kind of crap. I swear these guys ought to know better. They ought to know better. I mean, some of the smaller people ain't gonna know better. You know, they just know what's going up. Great, they're just happy. But you know, watch this global manufacturing index. Watch QE. Watch for sustained, very high oil prices. That'll tell you what's going to happen. As far as margin rate hikes, I'd love to know. I don't know.